Hey, what's going on, traders? In today's video, I want to show you the MPE price action strategy that we've been talking about for the longest time. Okay, so in today's video, I want to break down each of these steps and I want to show you how I do it live. Okay, now if you have not gotten a copy of our price action strategy, okay, the link is in the description. Okay, this is a totally free PDF guide. You can see over here that there's 33 pages of goodness. Right, we have a lot of materials inside here to help you get started in trading. Okay, now for you to use this strategy, I'm going to assume that you already know how to read candlestick patterns. Okay, in fact, in this guide, we do talk about candlestick patterns. We have a candlestick patterns cheat sheet. Okay, we also show you how to read the charts, how to identify a bullish candle, bearish candle, and all those good stuff. Okay, but for the purpose of this video, I will not be going through that. I'd like to just jump straight into the MPE strategy. Okay, a very simple price action trading strategy that works. Okay, it's very beginner friendly, and I want to show you how we do it step by step. Okay, so MPE stands for the market condition, price level, and entry. Okay, so the first thing that you need to understand is that you need to always identify the market condition of a current currency or any trading instrument that you are trading. Okay, so let me just switch over to the charts and let me show you what do I mean by market condition. Okay, so the market condition is very simple. Okay, there are only three types of market condition in any instrument. Okay, in the financial markets, there's only three kinds. Okay, you have a uptrend. Okay, let me just draw it. Okay, you have an uptrend where you have a series of higher highs and higher lows. Okay, so you have a high here. Okay, you have a high here, and then you have a low. Okay, let me just draw it for you. You have a low, then you have a higher high, and then you have a higher low. Okay, so this is the first kind of market condition that you have, higher low. So basically, you are always looking at whether the market is making higher highs and higher lows. If the market is making higher highs and higher lows, then you are in a uptrend. Okay, very simple. Okay, the opposite is also true. Okay, if we are in a downtrend, then you will have this pattern over here. Okay, it's just the opposite, nothing too special about it. Okay, let me just draw it for you. Okay, so it's the opposite. This is a low. Okay, this is a low, this is a high. Okay, this is a lower low. And this is a lower high. Okay, so this is really just the opposite of a uptrend. Okay, bullish or bearish is just the opposite. Okay, so these are the first two types of market condition that you need to be able to identify. Okay, and of course the last one is very straightforward also. It's when price is just trading in a range. Okay, basically it goes up, it goes down, it goes up, it goes back down. Okay, something like this. Okay, so this is a trading range. Okay, so step one involves identifying where you are currently, right? What is the market condition currently? Are you in an uptrend? Are you in a downtrend? Or are you in a consolidation? Okay, so let's look through this chart. This is gold over here. Okay, I want to take you through gold. Okay, so the question is, what type of market condition are we in for gold right now? Okay, it should be quite easy. Okay, if you cannot see it, just change over to the line chart and you can see that it's very clear. It's an uptrend. You have you have a high, you have a low, you have a high. Okay, no matter how you draw it, okay, your outcome should still be the same. Okay, the answer is you're in an uptrend. Okay, so let me just show you a bearish example, and then after that we'll move on to step number 2. Okay. Okay, so this is a bearish example, very simple. So you have a low here, okay, and then you have a high here, and then you have a lower low, and then you have a lower high. Okay, it's that simple. Okay, so this is step 1 of the day trading guide. Okay, this is the step 1 of the MPE strategy that we have in this PDF for you. Okay, so the details are here. Okay, but I just want to explain to you, I want to show you in real time. Okay, so after going through each of these steps, we'll analyze some charts together and apply each of these steps and make a complete analysis. Okay, so hopefully that's useful for you. Okay, so by the way, please give us a thumbs up, right? Help us to grow this channel so that we can impact more traders, right? Make sure you subscribe, right? Give us a thumbs up. And if you have not, right, make sure you download this trading guide. Okay, so step number 2 involves looking at the price level. Okay, now we need to ask ourselves, what is a good attractive price level for us to buy, okay, or to sell? Okay, so let me go back to the chart and start plotting the levels. Okay, so let's say we are using this. Okay, it's really simple, right? Just zoom out. Okay, what you want to do is you want to take a horizontal line, and I want you to mark out the major turning points of the market. Okay, now I get it, right? You might be very confused. You might say, oh, is this a turning point? Is that not a turning point? You know, you are new, you know, you find it hard. Okay, no problem at all. Okay, I have a general rule for you. Okay, if you are asking yourself whether you should include a level or not, then you shouldn't include the level. Okay, I want you to choose the levels which pop up at you. Okay, you shouldn't think so much. Okay, so for me, I'll just do it like that. Okay, you see how simple it is, right? I'll just eyeball it. I'm not over analyzing. I'm just plotting the levels as it is, just like that. You see how fast this is being done. Okay, you want to choose the levels which pop out to you. Okay, so that's how you do it. And after you select the levels that pop out to you, what I want you to do is I want you to adjust the lines. Okay, adjust the lines that you draw such that it touch the most number of candles. Okay, so this one is good. Okay, this one I will just adjust it. Maybe I'll just adjust it somewhere like that. Okay, and this one I'll just adjust it something like this. Okay, okay, and like that. Okay, so these are my levels. Okay, so you can see it's very straightforward. Okay, I've taken less than a minute to do this. Okay, so please do not over analyze, do not overthink it, right? Your job is simple. Just pick the obvious turning point. Okay, if you really cannot see, switch over to the line chart and start picking the major levels. Okay, please do not overcomplicate it. Do not confuse yourself and ask yourself, oh, this one over here, should I consider? This one over here, should I consider? Okay, or there is no need for that. Okay, you just need to choose the most obvious levels. Okay, so that's step number 2. Okay, so let's return back to our PDF. Okay, so price level is done. Okay, that's how you draw your price level. Okay, now let's talk about entry. Okay, now what we are looking at is we are looking for a confirmation that your support or resistance level is going to hold. Okay, so what do I mean by confirmation? Okay, we need a form of candlestick pattern. Okay, now this could be a hammer, it could be a shooting star, it could be a bullish engulfing, or it could be a bearish engulfing. Okay, now if you do not know what this, you know, what I'm talking about, what are these candlestick patterns? Okay, it's all covered in this PDF. Okay, we have the how to read the candlestick, right? You have your shooting star here. You have your engulfing as well over here. Okay, so all these are provided over here. So I will not go into that because it's here. But I want to show you in the charts, right? How do we identify? Okay, so let's go back to the charts and let's look at some, you know, engulfing patterns first. Okay, so over here, this is an engulfing pattern. Okay, let me just see if I can point it for you. Okay, this is an engulfing pattern. Okay, and then you have a another engulfing pattern over here. Okay, and let's see if you can find another bullish one. So bullish one would be this case. Okay. Okay, so basically it's very simple. Step number 1 involves identifying the market condition. Step number 2 involves identifying the key support and resistance level. And step number 3 is looking for a entry. Okay, your entry has to be based on a candlestick pattern. Okay, so let's use this example and let's go into, you know, this strategy step by step. Okay, because that's the purpose of this video. Okay, so let's say we are over here right now. Okay, let's say we are here. Okay, so step number 1 is market condition. Okay, so what's the market condition? Previously, we already identified that this is downtrend because you have a low, you have a high, you have a lower low, and you have a lower high. Okay, that's step number 1. Okay, what's step number 2? Step number 2 is you want to draw your support and resistance level. Okay, so we drawn it. Okay, we have this level, we have this level, we have this level, this level, and this level. Okay, so we have all this level. Okay, what's step number 3, which is E? right? We covered MP, now we are at E. Okay, E stands for trigger. Okay, so right now, what we want to do is we want to sell at one of this resistance level. Okay, very simple, right? Because you are in a downtrend, so you only want to focus on selling. Okay, at this point in time, if you are new, right, you are still learning, right, you're still struggling, please do not consider counter trend trade, just take with trend trades. Okay, that's simple. Do not complicate things, right? Achieve profitability with this strategy first, then if you want to trade counter trend, go ahead, but for now, please focus on trading, with the trend. Okay, so over here you can see that over here you actually do see that there's an entry. Let me just show you this candle over here. Okay, so what would happen on this candle, which is actually a bearish engulfing? You would have shorted, okay, this candle over here, shorted it, put your entry, okay, put your stop loss higher, a few pips above the high, and target the next support that you have. Okay, in this case, you target it this way, you will have gotten a nice trade off 1:2.6. Okay, so you can see it's very simple, right? Simple, but you need to make sure that you practice. Okay, so let's go through the process. Okay, this video is probably going to be a long one because I want to keep showing you that this strategy works. Okay, I want to keep showing you again and again and again that this works. Okay, so let's go to the euro dollar. Let's look at another chart. Okay, let's start from scratch. Okay, let's say that we are over here. Okay, so first question, what type of market condition are we in? Okay, so you have a high here. Okay, let me just identify for you. You have a low here. Okay, you have another higher high here. And then you have a higher low over here. Okay, so what is the market condition? The market condition is bullish. So what do you want to do? You want to buy. Straightforward. Do not complicate it. Do not say, oh, should I sell the top? No, you just buy off support. Okay, straightforward. Please do not complicate this. Okay, step number 2 is P. You want to find price level. Okay, so just eyeball it, select levels, the obvious turning points in the market. Okay, just start plotting your lines. Okay, and probably this one over here. Okay, so I've plotted my support and resistance lines. Okay, now earlier on I mentioned that more than just plotting the lines, I want you to adjust it. Okay, adjust the line such that it touches the most number of candles. Okay, so in my case, I'm going to do it something like probably something like this. Okay, this one I'll just adjust it again. Okay, remember, do not overthink it. Just just try to adjust it as best as you can. Okay, remember there's no perfect support and resistance level. Okay, so we did step 1 and step 2. Step 1 is market condition, we are bullish. Okay, so that means we want to buy. Okay, next thing we did is we identified support and resistance level. Okay, so the next step is that we need a trigger. Okay, so in this case, what happens is that you do have a trigger over here. Okay, you have a bullish engulfing pattern over here. This one over here, let me show you. Over here, okay, and this engulfing pattern broke the resistance. Okay, and you're in an uptrend. So in an uptrend, you either buy the breakout of a resistance or you buy at support. Okay, so there is an engulfing pattern over here. Okay, so you could have entered a trade something like this. Let me show you. Could enter the trade something just like this. Okay, I probably will put my stop loss below the this pin bar low. Okay, just to be safe. And sorry, I pressed the wrong one. Just a moment. Let me correct this. Okay, it's a bullish one. So I probably enter on this candle here, and I just put my stop loss below, and I'll target the next resistance, which is somewhere here. Okay, so let's take a look. This one would have a very nice risk to reward of 1:2. Okay, again, very simple. Just follow the steps. Okay. Now let's talk about another example. I want to keep showing you examples to prove to you again and again and again that this works. Okay. Even if you lose money, right? If you stick to this consistently, you just keep applying this strategy again and again and again and again, then you will be able to turn a profit. Okay, I'm not saying that you're going to win 100% of the time. Okay, no trading strategy can do that, but I'm saying that if you diligently apply this strategy, you should be able to see a profit. Okay, so let's try this example over here. Okay, let's say we are over here. Okay, so what happens is that now market is in a range. Okay, I'm not too sure if you can identify it, but basically market is moving between these two ranges. Okay, so your market condition is range. Okay, so in a range, you're allowed to buy the support and sell the resistance. Okay, so that's step number one. Step number two is to plot the levels. Okay, as always, so just take your horizontal line and start plotting your levels. Okay. Okay, so I only have two levels. Okay, let me just adjust it such that I touch the most number of candles. Okay, and I'm happy with these levels. Okay, so I have my support and I have my resistance level. Okay, so now what I need to do is I want to look for an opportunity to buy at the bottom or sell at the top. So let's see if you get it. Okay. Okay, not quite. This candle over here didn't quite make it to the bottom. So let's just be patient and let's just see if we get a trade. Okay, so this trade over here, this one can actually be considered a trade. Okay, that depends on whether you like the risk to reward. Okay, let's say you were to, take a long position, something like this. Let's see if the risk to reward makes sense. Okay, now by the way, always calculate your risk to reward. If it doesn't give you a good risk to reward, then do not trade it. Okay, so what you can do is you can put your stop loss below this low point here. Okay, and then your take profit will be here. Okay, if the risk reward makes sense, then you can take it. If not, just wait for price to come down lower. Okay, so let's see. Okay, so in this case, if you have taken this trade over here, okay, targeting here, and you did not manage your trade, you will have lost money. Okay, but that's fine. Okay, remember, we are not trying to get it right 100% of the time. Okay, in fact, if you have a risk to reward of 1:2, you do not need to be right more than half the time, right? Even if you are right 4 times out of 10 times, you're still profitable. Okay, so your goal is to make sure that you are taking good risk to reward trades. Okay. So this is how you apply it. Okay, in fact, if you trade, let's say you trade this hammer over here, okay, you will have lost money also, but you are sticking to a proven process. Okay, so that's what I'm trying to teach you right here is that as long as you stick to the process, you'll be fine. Okay, there are going to be losers, there are going to be winners, and that's fine. Okay, so let's say let's carry on our analysis. Let me carry on to show you. Okay, right now, let's say in this point in time over here, okay, we are in a downtrend. Okay, why are we in a downtrend? Very simple. You have a high, you have a low, okay, you have a lower high, and then you have a lower low. Okay, doesn't matter where you draw it. Okay, you have a lower low basically. Okay, so you're in a downtrend. So the question is, where are you selling? Where do you want to sell? So same thing as always, start plotting your levels. Okay, so just eyeball it. Okay, I have a support here. Okay, I have a turning point over here as well. Okay, let me go back. See, okay, and I have this intermediate level as well. Okay, and then I have this level over here, this final level here. Okay, let me just draw it properly. Okay, so as always, just adjust the line such that it touches the most number of candles. But in this case, I think that I'm happy with these levels. Okay, so right now price is over here and you see a very nice shooting star. Okay, so you could actually trade this because it follows the process, right? Step number one is to find a market condition. So the market condition is bearish. So step number two is find your support and resistance level, which we have done at 1.1937. Okay, so you want to sell at resistance. Step number three is look for a candle, look for a candlestick pattern to enter. Okay, in this case, we have a candlestick pattern over here. So we just enter it. Okay, so in this case, you would have been a very nice trade. You can see that it carries on to work like magic. Okay, let me just show you. Okay, Okay, so let me just show you this trade. Let me just plot it out. Okay, so if you enter somewhere here upon the candle close, and you need to just put a stop loss somewhere above, some distance above the high, the spike high, and you target the next support. Then this is the trade, okay, and you have gotten a nice risk to reward of 1:2.19. Okay, it's a very easy setup. Okay, you just need to apply it. Okay, so let's carry on. I want to keep giving you examples. I want to keep showing you how to do this so that you really understand how it works. And more importantly, I want you to practice it. Okay, if it's possible, right? Try practicing every single day, right? If you can dedicate 1 hour a day to practicing this, okay, do it 1 hour a day for the next 30 days. I promise you that your trading results will change. Okay, but you have to put in the time and effort to actually master this trading strategy. Okay, so right now, we are on this portion of the chart, right, where the market condition is actually a ranging. Okay, so you can see it's actually just bouncing between the highs and lows. Okay, so in a range condition, right, in a consolidation, you want to be buying support and selling resistance. Okay, so that is step number one, market condition, right? In this case, in this portion of the chart, okay, we're in a consolidation. So let's plot the highs and the lows. Okay, so again, you can zoom out so that you consider this as well. Okay, you start plotting your price levels. Okay, and then after that, you start adjusting your levels. Okay, such that it touches the most number of candles until you are happy. Okay, in this case, I think I probably will do it like this. Let me just see. Yeah, I liked it like this. Okay, so this is how I would draw it. Okay, so step number one is done, right? We are in a consolidation. Step number two is get your price levels. I've done that as well. Now, step number three, we need a trigger. Okay, so let's see if we get a trigger. Okay, so this one over here, you do actually have a hammer. Okay, so what you can do is you can actually buy. Okay, in this case, I will buy. Okay, let's say I'll buy it over here. Okay, and I'll put the stop loss, sorry, this is the wrong one. Let me just delete. I'll do this one. Okay, I'll buy here. Okay, and I'll put the stop loss just below the swing low, and I'll target the other resistance that I have. Just a moment. Okay, so I'll set it up something like this. Okay, and let's see if this trade plays out or not. Okay, now please understand that I'm just trying to help you understand the process, right? The actual results is not as important, right? I just want you to stick to the process. Okay, so in this case, this trade was a loser. Okay, and that's fine. That's all part of trading. Okay, so in this case, the support was broken. You got out with a small loss. Okay, so let's carry on. Okay, let's carry on. So right now we are bearish. Okay, we are bearish because you have a swing low here. You have a swing high here. You have a lower low and then you have a lower high. So you are in a downtrend. Okay, you are in a downtrend, and what do you want to do in a downtrend? You want to sell. Okay, very straightforward. Okay, so right now your bias is to sell. Okay, you do not want to trade consolidation anymore because the market has broken out of the consolidation. Okay, so that's step number one. Step number two, as always, is you want to get your levels. Okay, so I will draw a level over here. Okay, ideally, I want to identify a resistance level which I can sell at. Okay, maybe I can do this as well. Okay, maybe something like this. Okay, and then for support, I have this level here for sure. Okay, and yeah, I think that's it for now. Okay, so let's see if we get a trigger of any of these levels. Okay, so in this case, you see that there is a engulfing candle over here at resistance. So what you can do is you can enter again. Okay, you can enter the sell trade and just put it like that. And your stop loss is just some distance above, and your take profit is below here. Okay, again, remember, just watch your risk to reward. Make sure that your risk to reward is decent. Okay, if you have a good risk to reward, you do not need to be right a lot of times, right? You can be wrong most of the time and yet still make money. Okay, so let's see. Okay, in this case, it's again another loss. Okay, it's just part of trading. Okay, but just remember that the process is always the same. You always identify the market condition, then you go on to the price level, then you look for a trigger. Okay, if it's a loss, it's fine. Okay, so in this case, what happened? Price broke above this level and it went higher. Okay, so no issues. Let me just delete this. Okay, so right now price is at the second resistance that I've drawn. Okay, in fact, let me just adjust it. Okay, I prefer it like that. So let's see if we get a trigger off that level. Not quite. I don't really like this yet. Okay, can just wait. Okay, so in this case, maybe if you entered here, it's a bit late because it's very close to support. Okay, so this is what I mean. Okay, this is what I mean. Let's say that you do not enter on this candle. Okay, which personally I hesitated. Okay, did not enter on this bearish engulfing pattern. That's fine. Okay, let's say you saw this candle and you are convinced. But the problem is that if you were to enter, here on this candle here, there is no space anymore and the risk to reward doesn't make sense. You can see that, your risk to reward is terrible. You're getting like a 0.34. Okay, so in this case, you wouldn't have traded it. Okay, so more than just applying the strategy, I'd like you to consider about the risk to reward as well. Okay. Okay, let's go on and then maybe I'll just show you one last example. Okay, so in this case, price did this, rebounded. Okay, in fact, here I would consider it more of an uptrend already because you have a, okay, let me just clear it first. Okay, I would consider at this point a uptrend already because you have reversal signs, you have your left shoulder, you have your head, and you have your right shoulder. Okay, so in this case, I would be looking at this level already. I'll be looking at buying. Okay, in fact, you can actually see a higher high and higher low if your eyes are not sharp enough. You just change to a line chart and then you can see that actually you have a higher high here. Okay, let me show you. You have a high here, you have a low here, a higher high, higher low. Okay, so that's step number one. I would say that I would market condition is bullish. So step number two is I will identify the key levels. Okay, the key support and resistance levels. Okay, I would draw it something like this. Let me see. Okay, and three would be okay. So if you didn't buy off this hammer, okay, then you probably will get in somewhere here, maybe on this engulfing pattern here. Okay, depends on where your entry is, but in this case, you should have a very nice profit target, right? Risk to reward. Okay, let me show you. Let's say you enter something like this and your stop loss is just below this low here. Okay, and of course your target is the recent high. Okay, you still get a very nice risk to reward of 1:1.46. Okay, so this is how you apply this MPE strategy. Okay, so I think I've shown you enough examples, right? I want you to practice this. Okay, just a gentle reminder, okay, about the 3 steps. Step number 1 is you look at the market condition first, where you ask yourself if the market is in an uptrend, downtrend, or consolidating. Okay, your market condition will determine what you want to do. Okay, in the uptrend, you want to be buying, right? In a downtrend, you want to be selling. Okay, in a range, you can do both. You can buy low, you can sell high. Okay. Now, then you want to identify the price level, which is your support and resistance levels. Okay, as I said, do not try to get it perfect, right? Just eyeball it. Choose the most obvious levels. Okay, if a level is questionable to you, then just ignore it. Okay, the rule of thumb is that you want the obvious levels to pop out at you. Okay, if it pops out to you, then it's obvious level. If it doesn't, then it's not a price level. Okay, and step number 3 is you use the entry using each of this, one of these price action candlestick patterns. Okay, again, all this is covered in this 3-day trading guide, so make sure you just check it out because everything is just there for you. Okay, if you have any questions, just leave a comment down below. Right, I want you to practice this. Okay, we will record more videos like this, right? More charts, more analysis if you like it. So if you like this kind of video, please leave a comment down below. Let us know. Okay, if you have any questions also, please let us know. Okay, and also help us to grow, right? Help us to like this video, subscribe, right, so that we can reach more traders. If not, thanks for watching. I'll see you in the next video.